Prospects brighten up with Honeywell power play in technology and order book. Navin Fluorine International Limited, the biggest Indian manufacturer of specialty fluorochemicals, manufacturing locations spread across 2 states of Gujarat and Madhya Pradesh. Navin has 3 core business segments: Specialty Fluoro Intermediates, CDMO, Contract Development and Contract Manufacturing Operations, HPP, High Performance Products. Specialty fluoro intermediates are used as raw materials in pharmaceuticals, agrochemicals and insecticides. CDMO comprises chemical synthesis of fluorinated compounds for pharmaceutical, agrochemical and specialty chemical industries. HPP comprise refrigerants used in air conditioners and domestic and industrial refrigerators. It also includes inorganic fluorides. The first 2 segments, Specialty Fluorochemicals and CDMO, are both margin accretive. Navin enjoys long-term contracts for supply to pharma and agrochemical industry in respect of both the segments. The third segment, HPP, High Performance Product, largely represents refrigerants, in which Navin has a leadership of over 40 years. But currently, it has got a strong competitive edge over its peers like Aarti Surfactants, Viniti Organics and Anupam Rasayan, based on its technology partnership with Honeywell. Using the collaboration, Navin manufactures next generation refrigerant with ultra low global warming potential and exclusively supplies to Honeywell. And here Navin has better realization. Of its revenues, more than half comes from exports. The reason for exports is also due to exclusive supplies to Honeywell under the technology agreement. Geography of exports includes Europe, US, Middle East and Southeast Asian countries. Adding to the strength of Navin Fluorine is its solid shareholding pattern. Of the total paid capital, almost 45% is held by DIIs and FPIs. Strong operational generations and a planned reinvestment of internal accruals is unique to Navin. Over last 30 months, it has implemented capital expenditure schemes of over 1,700 crores and it has lined up major investments in the very near future, and that makes Navin equipped for projects in the days to come. Navin is evenly leveraged, has a strong equity of over 2,200 crores, against which current long-term debts around 1,000 crores, likely to move up to 1,500 crores by the time the ongoing capex program is completed. Although the finance cost has been rising for the last 5 quarters, it is quite proportionate to the benefits expected out of the capex program under implementation. 3 major challenges: realization under pressure, largely due to European destocking and dumping in the global market by Chinese suppliers. As regards inputs, fluorspar, the calcium fluoride, forming about 40% of raw material cost, the prices are quite volatile, once again driven by Chinese suppliers. Navin has arrangements from miners in South Africa for long-term supplies as a safeguard. And the third pertains to operational matters, process stabilization and debottlenecking at the Dahej plant, attended on an ongoing basis. Near-term outlook appear brighter and better for Navin for multiple reasons. Destocking in the European segment is drawing to a close. Honeywell has been quite supportive both in terms of technology and order book. Process stabilization is getting into place and the company is on the verge of getting the benefit of a strong operating leverage. The multi-bagger returns which Navin delivered between 2019 and 2023 is quite impressive. The price moving up from 707 in 2019 to a peak of 4,950 in May 2023, going up almost 6 times plus. But thereafterwards, there has been a fall. Particularly on 29 September, the price crashed 14% subsequent to resignation by the managing director of the company. But the real reason on the continuous fall appears to be the downturn in chemical industry across the globe. The share price has been in the bearish zone and currently it is placed at the lower end of Bollinger Band, below all averages long term and short term. Price action, however, throws up a positive sign with no quantity support to further fall in prices, suggesting reversal being closer than before. The current level, price earning multiple, being below long-term median level, there might be an opportunity for long-term investment. Hope you found this video on Navin Fluorine interesting and useful. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos with rich content at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.